What's up, guys? I'm back from Miami. A lot has happened in the market in recent weeks. I'm going to give you guys an update of all the headlines, where I think the market is headed, what is the Federal Reserve going to do, what is Trump going to do. I'm going to cover that all here in this video. We'll get into the charts and also give you guys some really solid setups that I'm looking for in the next couple weeks. And without further ado, let's just get into some of the news, right? So we had CPI come in on Tuesday. It was below forecast. And then today we had PPI, which is a huge miss. And really that just clears the runway for the Fed to lower rates because, CPI and PPI, those are inflation as well as a leading indicator for inflation. And since those are lower than expectations, maybe inflation is cooling, maybe the economy is cooling. Maybe that means that the Federal Reserve is comfortable with lowering rates. Obviously, we've had Trump yelling at Jerome Powell saying, lower rates, what are you doing? Every other country is. But more importantly, he's been in news recently with US and China securing their trade deal with Bessent in Switzerland and Geneva on Saturday as well as Sunday. So they lowered the retaliatory tariffs on each other. Now you have Trump who's talking about, just keep buying. Everything's going to go a lot higher. But more importantly, he's trying to pass tax cuts, right? So when you lower taxes, what does that do? That stimulates the economy. That would be bullish for risk assets like stocks, crypto, fart coin, all of those things. He's right now in the UAE. He's over there with a bunch of other CEOs, Sam Altman, Jensen, Sube. You got AMD, NVIDIA, Palantir. So all of them are over there trying to pump their stocks. You also have Elon Musk, who is giving a demonstration of Tesla Optimus robots to Prince Mohammed. Great for my position. I'm long Tesla right now. But right now you're also seeing like Microsoft with a little layoff, 3%. Russia and Ukraine, still a lot going on over there. But then they're also trying to raise the debt ceiling, which is also bullish and stimulation for the economy, right? So you have tax cuts, debt ceiling, potential rate cuts. Those are all bullish for risk assets. And the market's going to look at that and think, okay, well, we're just going to keep pushing higher. And then, of course, you still have the potential for trade deals and everything else, right? So Trump's going to be back in DC tomorrow. We'll see if he starts trying to pump the market. I'm sure he will. Tomorrow's option expiration, so you could see some weakness. We had some today, but ultimately we broke out of this bull flag. It was pretty clear. Talked about it in the Discord. We broke out to the upside on SPY. Same thing on the index. And we actually broke above, right? So we're consolidating under this other trend line that we originally broke back down in March, and then we came back up and we're retesting that level, right? So we fully retraced the tariff announcement, and now we are pushing above that amount, right? Above that same relative level. And now we are trying to break back above yet another trend. And so that is bullish. If we can hold this level, right? If we can continue to push higher, it's probably better if I show you on SPY. But you can see this green trend line is the same line that you're seeing that was in red on the other chart. And we're trying to break above. And if we can do so, then we are going to continue higher in the market. We just formed two bull flags. One was under, one was on the line, and now we broke over that at the end of day. We got the candle close above, which from a technical perspective is bullish. We secured the reclaim of that trend. That doesn't mean that we can't just dump back down tomorrow. So really what I'm looking for, this is like an inflection point, right? So this could be considered a breakout, right? Because we closed above. But if we start to break back down, this could be considered what is called a bull trap or a false breakout. And then you would have like a move lower, right? So we'd probably come back down to 584, could even come back down to 580. We could even come back down to this bull gap that was formed on the China-US trade deal. So this will act as support, right? The tap of this gap will act as a strong level of support. Bulls want to defend this gap, and then we could push higher again in the market and try to break back over that line. So there's a decent chance we could break down and push to this level around 577, even potentially 575. Now, if we do break below this and there's a pretty solid chance then that we're going to fill this gap down to 565. Obviously, the 561 to 566 level has been a battleground for bulls and bears, bullish above, bearish below. That was also the 565 was where the tariffs were originally announced. So that's a really key level. So that level will act as a strong level of support. It could play the bounce there. So there's a couple different things that I'm looking for. You just got to look for the right setup. I'm really bullish right now. It's hard to be short because, even if this starts to drop and then come back down, break through 584 or 580, Trump's going to just come and start trying to pump the market. Bissent's going to be on Fox News, like whatever it is, they're going to be there trying to really stop the market from falling and try to announce like a Japan trade deal or South Korea, all of those things. And then Japan just had really bad GDP, so maybe they start lowering rates again. So yeah, we'll see what happens. Like right now I'm still bullish, but there's a really solid chance we could push to all-time highs, but you just have to respect the trend lines, trade the price action, trade your setups. So that's really what I'm looking for on SPY. The reason why I also think that there's further confirmation that this could continue higher is because just look at tech. So tech is already over that trend line, right? We broke that down, but you can see here it is now above that trend line. And so it's kind of like throwing your hat over the fence, right? So like tech is already over the fence. Now it's just like a matter of time before SPY also jumps over the fence. And then same thing with small caps, which is this 210 level, right? So we're kind of forming like somewhat of like an inverted head and shoulders. Maybe we come back down or something like this, but ultimately this 210 level is where I would be bullish on IWM with a move to 214, 215, and then even potentially to 226. And IWM is a lot lower from a relative level to tech. So it's possible IWM could potentially catch up from like a relative position to tech as well as the overall market. So that's what I'm looking for there. Really good setups on Apple, Tesla, maybe potentially later Amazon. We already played it to the upside. I think it needs to drop a bit more, but it could continue to push. But let's just take a look at Apple, right? So tech, as you just saw, was only around like 4% off all-time highs. Apple right now from all-time highs is still down almost 19%. So a lot lower from a relative perspective. It had earnings recently, and unfortunately it was breaking out to the upside. Hit this gap. It's been struggling to get over this bear gap that was formed from the tariffs. It rejected, and then ultimately when these earnings were announced, it broke lower. They're still like buying back shares and things like that, but you can see it found a base at that 196 support level. It was able to close right above it. You see where it actually closed, right? It actually was like creating somewhat of a false breakdown on that support, and then it closed above. And then we had that bull gap, this right here. This is from the China-US trade deal. We pushed higher. We filled this gap, right? So we had that gap from earnings. We filled that gap. Now we're trying to reject a little bit. It's pausing. As long as we can hold this 206 level, it's a really strong move back to 213.64. That's a key level. If we can get into this gap, you're going to see 220 and then 225, and that could happen in a quick move. So that's what I'm really looking for on Apple. Obviously, SPY and QQQ have like made that crazy run, so it might take some time for this move to play out. But I'm going to be just looking at Apple, trying to buy the dips at these different levels. And, this kind of is like a false breakout because it broke back down, but now it broke out again, right? So it might come back down, touch this gap, bounce. It could even fill this gap all the way down to 198 and then bounce, or it could even come back down and retest this green trend line. But those are all like solid entry points. You can always play further out dates in the market, but I do think at some point you are going to see like this 220 and 225 level and even potentially higher. And I just realized there's this sneaky little bear gap up here. So that's really what I'm looking for, is a move towards that 226, 225 level to take profit. But this move will play out. It's just, when it happens rather than if, in my mind, unless something crazy changes in the narrative of the market. But I doubt it at this point. So another thing is Tesla. Tesla's been on this crazy run. We've been playing it since 250. We had that little bull pennant that formed, and then we pushed higher, formed a bull flag above the downtrend, and then we broke out above that, reclaimed this uptrend, and then we've been pushing higher. And so like you can see here, this is all a false breakdown. We had that flag, and then the measured move on the flag, if you just copy over this flagpole, we move this up here, you can see that that is a measured move to 360, which is a key level in the market, right? So for Tesla, this is the key breakout point that happened last year in Q4. It also is a resistance level. When it broke down, it couldn't break back over and then rejected. Right now, this 326 to 360 level is like a battleground for bulls and bears. Obviously, there's a lot of people who are trapped short in the market on Tesla. And because we are breaking back and reclaiming all the trends, it's all a false breakdown, a bear trap. And we not only broke the downtrend, but also reclaimed the trend. So this is really strong for a move to 360. We're trying to consolidate a bit here. We have two different gaps that it's stuck in between. I think it'll consolidate for a bit, then we'll see a push higher. We got the Robotaxi event in June. We also have Elon posting Optimus Robot breakdancing on Twitter. Then a lot of news, and Elon's trying to pump the stock as much as possible around full self-driving and the total addressable market and what that actually means for Tesla as a company. You even have NVIDIA's Jensen talking about robotics is the future with AI and chips. And so really bullish for Tesla right now. There's just a lot of hype behind it. And then, of course, this Robotaxi event might just throw it over the edge. 360 is a profit-taking target. You got to respect that line. It's rejected there before. But if it does break back over that, I'm looking at 373 to 380. And, you know, it could move a lot quicker than that. But you see it's also like a low volume shelf there. So at least initially, it is going to reject around that 360 to 373 zone. It just really depends. Sometimes the market likes to push a little over these key levels and then trap some people in and then come back down and then later shake out those hands and then it'll push higher. And that's just common, I guess, it's common investor beliefs, right? Like whenever you see a move across a key level and it's pushing higher, what happens is the people who are already holding see that it's breaking over and they're like, okay, I'm gonna start taking profit, right? So like people are getting caught basically buying the bags off the people who have already made money. It comes back down, it retests, maybe consolidates for a bit, shakes out the weak hands, the profit takers, and then it pushes higher. That doesn't always happen. Sometimes it can actually just break back down. So you always want to respect, take profit in the strength, and then, you know, go from there. So that's it for Tesla, Apple. Those are the two stocks I'm really looking at. Another one is Unity. This one is a little bit iffy right now. I've bought some 25 calls for August, as well as some like really far out the money ones for June. We kind of had like a little false breakout. It was really just really quickly on Wednesday. It wicked above in the early session and then it sold back down. This is on pretty low volume. Roaring Kitty has been tweeting about this last year and some in January. Ultimately, I think that he's going to start tweeting about this again because there's a bunch of call premium for Friday, June 20th. Hopefully we can break over this green trend line and red trend line. So it's like a double breakout in some ways, but we'll get this move to 24.36, which is a mega key level. Historically, this is like a multi-year 24.36 support or resistance level. And if we can break over that, you're going to see this move to 28 and even potentially to 33, just depending ultimately on where the overall market is, as well as if Roaring Kitty starts tweeting. He could also have an impact on GameStop if he does that, if you are trading it. But I am looking for this to break above. The safer bet would have been to wait and load once it actually broke above, but I tried to front run it a bit. I'm probably going to have to continuously average down into this stock. But if it starts breaking back below like $20 a share, right? So if it's not able to hold this zone here, then, you know, I might be cutting out for a loss. So ultimately, bullish on Tesla, bullish on Apple, bullish on the market if it can hold that trend line reclaim that it just broke out above. But we'll see what happens tomorrow. And then, of course, we got June expiration, which is quad witching, as well as June quarterly futures roll. And I'll talk a bit more about that in another video, but basically it puts the market on tracks quarter to quarter, month to month. The quarterly flows are stronger than the monthly flows. And because we've had such a deep sell-off, we are having an equal and opposite V-shaped recovery in the market. And so we certainly can continue higher for the next couple weeks, especially if we reclaim that trend. I would like to see a lot of like a stronger move, way more than what people expect. Because right now people are talking about trying to short the market. And, we could certainly have a little bit of a pullback. But ultimately all the trade deals, the Federal Reserve, inflation's starting to cool, all those things are bullish. So I still think we can have a really strong move in the market. But then in June, there's a lot of traps in June. I'm going to start sizing down. I think there could be a pullback, but it really depends on how far we are in the market and where we will potentially sell. So I'll be talking about that all in my Discord. Make sure you guys join it. It's completely free. Post everything in there with full transparency as I enter and exit trades. I also have the challenge account that I'm trying to grow to $1 million. So follow along for that. But I hope you really enjoyed this video. Had a really good time in Miami over the week. We're back on the grind. Going to keep pushing out content, start hosting some live sessions. I hope you're enjoying everything. The market is really exciting this year. We got a lot going on. And we are going to have another giveaway. I just shipped out the mechanical keyboard to Buttered Sausage. So he'll get that on Monday. And then once we hit 1,500 subscribers, there's going to be another giveaway, maybe multiple gifts this time. I just want to give back as much as I can to this community. Thanks for watching, and I'll see you in the next video, guys. Peace.